Hello, everyone, and welcome to another special episode, actually, of our Forever Cash Life Real Estate podcast with yours truly, Jack Bosch. Today, I am going to talk about the COVID-19, the coronavirus impact on multifamily investing. We're going to get started in just a second.
Welcome to the Forever Cash Life Real Estate Investing Podcast with your hosts, Jack and Michelle Bosch. Together, let's uncover the secrets to building true wealth through real estate and living a purpose-driven life.
All right, so with that said, let's get going. So my guest today is James Kandasamy. James, how are you doing today?
I'm doing very well, Jack. Thanks for having me on your podcast.
Yeah, you're very welcome. So James, so you own and operate how many units right now?
Right now, it's almost 1,700 units across 9 apartment complex in San Antonio and Austin market.
So you're in the San Antonio and Austin markets, not Dallas, but in the Texas market.
Texas market.
2 of the 3 hot markets over there, or 2 or 3 of the 4. And you have owned those for several years right now. Yeah. And you also manage them, right? You have a property management company that manages them yourself.
Yes, absolutely. We are a vertically integrated company.
Wonderful. That's perfect. So now your properties are typically they A, B, C, D class? What are they typically?
Class B and C. I mean, when we got started buying a lot of C's, and now we are more into the B space. B and C is what we focus on.
Yeah, no, it makes total sense. That's actually a smart thing to do that. We're doing the same transition. We started in C's and now we're going to the B's. And so now with that said, tell us what you see on the ground right now with the COVID-19 virus. How has it affected multifamily so far from a day-to-day operation?
In day-to-day operation, there's a lot of things changed, right? I mean, right now, we are almost at April 1st. I mean, tomorrow, day after tomorrow will be April 1st. And the next, April 1st plus 10 days, we are going to look at how our collection is going to be, right? Because so many cities and government has given mixed messages that, evictions are on hold. And, but, it's for people who are impacted on COVID-19, right? And we have to communicate a lot to our residents on, what do we expect from them, right? So we are not telling them not to pay rent. Of course, some people think that they don't have to pay rent, but we're telling them that rent is due, you have to pay it, but if you lost any job, we can work on you on some kind of plans like not partial payment, payment plans, right? Or, we're going to, waive all the late fees, right? So a few things that we're doing as an industry in Texas right now, and that are the 2 actions that the Texas Apartment Association are recommended. One is waive all late fees, and the other one, payment plan for residents who are impacted. So there's a lot of communication. It's like my brainwashing the residents, thinking that, hey, you still have to pay rent, right? And that's what the message is. But if you're impacted by COVID-19, we definitely sympathize with you, and we really want to work with you and help you out. So that's what's happening right now. We're so busy communicating that, we will know soon on how effective is our communication in the next couple of days.
Yeah, similar. In the properties we own, we do the same thing. We don't self-manage them, but we have been working with the management companies that are communicating overall across the board pretty much the same message. This is not a free-for-all. If you don't pay and you have a job, then you're ultimately still going to get evicted. But if you expected to pay, and it's good for you to pay because you stay on track, you don't have that ding against you later on. But if you have problems right now, come forward, communicate, tell us. We're willing to work with you if you have problems. And I think that's a really solid message to share.
And let me add a few more things. So the other thing that we have done is we also create a standardized Q&A for our staff, because this is a very rapidly changing environment, not only on the rent. I know a lot of people are focusing on the rent, right? But what happens if one of the residents has tested positive? What is the response from our staff? Because it's a bit too late, right? Sometimes, by the time tested positive and everybody in the complex get to know about it and people want to leave your apartments or what, right? So what do you communicate to the resident? What you don't communicate to the resident? So, and what if one of our staff is impacted with the, with the virus, right? How do you all respond? So there's like 10 different Q&A that we are prepared to communicate to our staff, so that everybody has a standard message, because in property management, that's the tricky part, right? Communication is tricky, and with this kind of fluid environment, it becomes more critical on how do you make sure that everybody get the same communication, everybody makes the same communication to the residents as well.
Yes, 100%. So great. So this is going on, and obviously we have to. We both belong to a mastermind of multifamily owners, and we had a call there, and it's it's like the consensus. Everyone is like, hey, if somebody has trouble, let's help them, but it's not a free for all. So so I'm glad to see that this is, but not everyone knows that out there, right? So what we discuss, we sometimes believe that yeah, we know all those things, but outside of our circle, people don't know how the landlords are going to be generated. But now what people are thinking is like, oh no, this is all easy. I don't have to pay because they're rich anyway. Right?
Well, I don't know whether they think that way or not. I think they think that, this is a nationwide crisis and people just do not know. I mean, there's so many messages on the rent that it's been coming, right? Even yesterday, I think during the White House briefing, I mean, I heard the president say the landlord's going to take it easy. I said, what do you mean landlord's going to take it easy? There's no easy right for us, right? I mean, we owe our lenders in all ways, right? I mean, there are some forbearance and all that, but there's no free ride at all, right? We still have to pay.
As a matter of fact, let's talk about this next. What happens if a whole bunch of people don't pay? And what happens to you or to us as the landlords then? So what are the rules right now? There's the forbearance rule, right?
Yeah, there's a forbearance rule, and I mean, there's three or four things that any landlord can do, right? One is, quickly go and put in forbearance, which means basically you're delaying the mortgage payment for next 3 months to up to 12 months. And for some lenders, it can go up to 15 months, right? But the thing is, the guideline that FA, I think Financing Housing Agency has given is, you cannot evict anybody during this time, which means they're giving us forbearance, but at the same time, you protect the residents as well, right? So that's one way to do it, right? The danger with that part is, if the resident is not paying after 2-3 months, they may owe a lot of money after 2-3 months, and now they're going to be thinking about skipping, right? Because it's a bit hard for them to get out from this situation.
Yeah.
Right. And I know we have a lease and all that, but in Class B and C, not many people, look at leases, right?
And the people in Class B and C are like month to month. I mean, they're not month to month. They have an annual lease, but they live month to month. They don't get paid. They don't have any more money. So that's why the law of the industry is concerned, because we're providing good housing and the tenants, if they can't pay. But as you said, if now they don't pay for 3 months, most don't have the money to ever catch up on that. So they're going to probably skip, which ultimately means that we'll never get that rent back. And now we have a problem for fulfilling our recommendations to our obligations to the lender. And that's the other part of the forbearance thing. People's like, oh, well, you don't have to pay. Well, yes, we do. We still have to pay. We just have to pay it afterwards. Yeah. And if we can't pay after 3 months, then in the 4th month, if we can't pay, then it goes to special services, which actually means, in essence, you get put on probation and things like that, and potentially the deal can go down, the property can go south, and a lot of investors lose millions of dollars. So this is really an important thing to remember if you're a tenant, that you're not dealing with just the rich guys that are doing stuff. You're dealing with also with a lot of people's money, with a lot of people's investments, and with a potential that goes also down the drain. Now, obviously, there's ways to protect them. So we have substantial reserves on the sideline. If we don't have a tenant in our property for the next year, we can pay the mortgage for the next year. So we have lots of reserves in the background for that. Won't happen. You probably have lots of reserves.
Yes, we have reserve for our properties as well, but we want to make sure we use for the right reason, right? So that's another way, right? Just put in your own reserve. The other ways you can do is you can also do manager can fund the deal as well. I mean, you can have personal money going to the deal, and the third one is do a capital call to the investors as well, right? So, these are the few options that we can work on. While we go through this bumpy road with if the residents are not paying, right? So, but hopefully that all doesn't happen. Most residents, hopefully, they're going to pay.
I personally think it's not going to be as bad as everyone says, because again, 80-90% of people still have jobs, and they are going to be able to continue to work. Plus, people have 2 jobs. Like there's also the husband and wife, or so they have their work, live together. They have two jobs. One job continues to come in. The other one now is getting a $1,200 check, right,
Yeah,
in the next
correct.
3-4 weeks.
Correct.
So, which plus a child, another 500, which in many cases is more than people make per month.
Correct.
And
Yeah. So yeah, all that counts, right? Yeah, I don't think so. It'll be too bad too. I mean, especially for April, right? I think
yeah,
it's more tricky for May because if someone lost the job, they may not have got paid for for the whole March, to pay the rent for April, right? They may have the money for April, but May could be more tricky. But May is when all this money is coming from the government. I think there's going to be a lot more stimulus package being given by the government just to make sure that people don't lose their houses, right? At the same time, they want to make sure all the small businesses continue to be running because everybody need to be paid and on the payroll and all that.
Yeah. Now, one thing in the stimulus package that I think not everyone understands when they hear it is like, oh, small businesses is getting so many billions. And the people are getting so many billions. Oh, government is only supporting the businesses. What people don't understand, though, is that the money that people get is basically money that they get, right? They don't necessarily have to pay that back down the road, right? The money that we're getting if a small business gets money, they get it as a loan. So they have zero revenue right now. It's a small business, not even multifamily right now. Somebody's a pizza store down the road and nobody guys saw, or not even a pizza store, a clothing boutique down the road with a $3,000 a month rent, and they have nobody coming into the store anymore, and they're shutting down, and now they're losing a ton of money, have inventory, can't pay their bills, and so on. In order for them to be able to survive, they might take on a $50,000 or $100,000 extra loan, but that's a loan that they'll have to pay back to the government, to the Small Business Administration, and so on. And in addition to all the loans they had to take on to even start the business in the first place. So it really is something that gets people deeper in the hole. It allows them to survive, but it's going to burden them for years and years down the road. How do you see that?
Yeah, I mean, from what I know is there's two loans that's being rolled out by SBA. One is called the disaster recovery loan, right? Which is a disaster loan, which is basically what you're talking about. It's a loan at 3.75%, where you can use it to recover, but it's still a loan, right? But I think the CARES Act, which was approved, a few days back, I believe they have a forgivable component to the loan, right? So if a restaurant owner has they can take up to 2.5 of the payroll amount that they have. And of course, the restaurant owner, this restaurant is closed, right? So what is he going to do payroll, right? But I think, business owner need to be creative, right? You are going to get paid with this money for somehow because there's 8 weeks forgivable amount that the government is giving if you keep people on payroll, right? So they have to figure out something else, maybe some kind of training for the employees, right? Something to do, maybe do some kind of audits, right? So that's what we are doing right now. We're doing a lot of lease file audits, and we are making sure people are employed and making sure people still get, their pay, and everybody's employed. So the second part of the SBA loan, which is called the payroll protection program, that has a 8 weeks component of they're going to give it as a grant, which is a freebie for the business owners if they keep everybody employed.
Right. So good, wonderful. So in essence, what we talked about. So if you summarize this so far, so the people are not going to be evicted, so that's good for the people. We don't think that many people are going to be stopping to pay. As a matter of fact, we asked our tenants, and not a single one came forward and said they have issues. And one property and another property, only one person came forward and said they're going to have issues. And then the next day they paid the advance, the rent for April already. So somehow they either got issues or got the severance pay or something, or I don't know, or they didn't have any issues. Ultimately, things got resolved. And then there's ways for us as operators to get this forbearance program and also be able to buffer that, even though obviously afterwards we have to pay a higher amount then. But there's ways for everyone to get to this crisis. This is overall good. Whether it leads to inflation down the road is a different question. But that's overall good. So now let's look at for the business sector too, the small business sector. There's ways to get loans for forgivable pieces and so on. So there's a lot of things are being done, which is good, which is positive news, at least in the moment right now, in the terms of surviving for those businesses, surviving, getting through the crisis, and so on. So now let's move over to the financing. What are you seeing? Or actually, before we move that, how long do you see this going on? How long? I mean, obviously nobody has a crystal ball, but how long do you expect this this issue to last right now?
So in my opinion, I mean, everybody talks about this. So there's no crystal ball in front of them. But in my opinion, there's going to be two phases to this recovery. One is the V shape, right? As people talk about, is it the V shape or U shape or Nike swoosh, right? So I think for class B and C, people who work in these hotels, being a server in restaurant, and people who have just lost their job who are on hourly, they're going to come back very quick. So their recovery would be more of a V shape from what I see. But people who are class A, who are highly paid, or people who are professionals who are working in large corporation which does businesses across worldwide, that's going to be a slow recovery, like a Nike swoosh recovery for them, because this has impacted worldwide, right? It's impacted worldwide. So definitely there's a lot of demand going to slow down, right? And they already lost a lot of money, and big companies, a bit harder for them to recover very quickly, right? I mean, as I said, restaurant, unless the social distancing had created a capacity issue in the restaurant, right? Because there's less people who can be in restaurant. That could be a case too. But as I think it's a V-shaped recovery within 2-3 months for the class B and C renters. But class A renters, or people who are working in large corporation, the entire economy is going to take some time for the recovery. That could be until end of the year. So that's the Nike swoosh recovery.
Yeah, I mean, it makes sense. I mean, if you look at it, manufacturing, like car manufacturing right now, the trade between China and the US is down by like 60-70% or so. So that's just the number of boats going back and forth. Airplane traffic is down. Now, of course, that picks up again. So the airplane, the urgent stuff, you want a new iPhone from Apple, it's going to be produced, shipped, and 2 days later or a day and a half later, you have it in your hand. Well, that's not happening right now, right?
Correct.
But that'll pick up quickly in the air. But on the boats, on the ground, the boat takes several weeks to come over there. And in order to backlog even there's just the stuff that's being produced, that's sitting there. Like Michelle and I, we ordered some face masks. They're still sitting on the loading dock in China. We can track it. It's sitting there. It's been sitting there for 3 weeks because it doesn't, of course, it's not the highest priority.
Like the highest priority,
ventilator produced in China that is needed in an American hospital is much higher priority than a box of paper face masks that might prevent me from getting sick or so. So
But I do think once recovery has happened, I think our economy will be much more robust, and the growth will be a lot more higher compared to what it has been in the past 5 to 6 years, right? And the reason is because the government have realized the dependency on China has become so much. Right now, they're going to start to produce a lot of manufacturing in-house, or maybe they go somewhere else. I'm not sure. I think probably a lot of pharmaceutical, medical things will be in-house, but they will try to go less dependent on China, which has always been the case. But now we have a solid case, right? So when
you almost have to, if you're like a manufacturing company like this like a car manufacturing company, is this on-demand, just-in-time delivery that's gotten really popular over the last 40 years. That you only carry like 1 or 2 days worth of inventory because it's constantly being shipped from China. Well, you can't rely on that anymore. You either have to build up your warehouses much more, or you got to have a local provider that can jump in and produce at least a portion of that, so you can keep going. Like the reason why in Europe at least, I don't know in the US, but in Europe, why Mercedes-Benz is closed for the last month already, is not just because of the coronavirus. It's because they're missing the pieces to actually produce the car. Like if they have a certain piece, like the front bumper that comes from China, and no front bumpers arrive anymore, you can't produce any more. You can't put any more cars out without the front bumper. So once they're out of bumpers, they're out of production. It's missing pieces, and if out of 10,000 pieces, I don't know how many pieces are in a Mercedes-Benz, but out of 10,000 pieces, there's even just 50 missing, and you don't have a local provider to provide them. You have to stop production. You can't just keep going.
Yeah, absolutely. One key piece that the government need to resolve, they have been helping the people, they're helping the business owners and all that, but the mortgage industry, the debt industry is a very tricky industry. There's so many, we are only buying from like Fannie or Freddie or any lender, right? But they do resell some of their loans to some other people, and that market has gone right now. So right now,
let's jump into lending. So what's happening right now?
Maybe I jumped too quickly, I guess. So
go ahead. It's perfect time.
So lending has fundamentally slowed down, right? So like Fannie Mae has put in a lot of stringent requirement, like they want 12 months reserve or 18 months reserve for loan above 6 million, below 6 million is 18 month reserve, above 6 million is 12 month reserve of principal, interest, and tax, insurance, and there's a lot of money, which basically they're saying that we are not really want to take any more risk right now, right? So which kills a lot of deals out there, right? I mean, the sellers have not come to their senses that the market has changed. The buyers is not buying anymore, right? Whoever in the deal they're trying to get out, right? They all either they have gotten out or they're getting out if they can, right? So the sellers have not really dropped down the price yet because this happened so sudden, and the sellers think that okay, maybe we can ride this storm and all that. But if this continues forever, I mean not forever, if it continues for another 1 quarter, a lot of sellers will try to sell. And on the lending side, a lot of lenders on the bridge side is gone. They are basically, they don't have, they're usually middlemen, right? They usually resell their loan to third party to securitize. But right now, there's none of that is existing right now. There's no more market available over there. So basically, the bridge lenders are gone, right?
That's why I love my land business, by the way. Just have to throw that in, because in the land business, we don't deal with tenants, we don't deal with toilets, we don't deal with lenders, we don't really think. But we are talking about multifamily right now. So just to say that, to summarize this, you said the Freddie and Fannie have put up such high restrictions that it kills a lot of deals right now. The bridge lenders have pretty much gone away right now. Right? I was in the process right now of just even on some single family homes that we have free and clear. I wanted to refinance them, and from one day to the other, they basically say we stopped lending right now. Now I don't expect that to last forever. This is more like a knee-jerk reaction right now to the end, because nobody knows what's going to happen next. So everyone is just like, okay, let's stop and wait. So if in 3-4 weeks we see that, or 5-6 weeks, whenever it is, that we see that this entire situation all gets easier, I expect this all to restart. But the bridge lenders coming back in and so on. But don't you think everyone will continue for a longer time to have much more stringent requirements?
I think so, yeah, because as I said, a lot of lenders out there has really got scared, right? I mean, keep in mind, in February, everybody was just lending normal. Everybody was happy. The liquidity, there's so much liquidity in the market. There's so many lenders out there, but now a lot of lenders are gone, right? So they really got scared that they didn't expect this to happen. So they're going to be very, very scared, for the next at least 1 quarter, I would say, to lend any money. So either the spread is going to be very high, the interest rate, 10-year treasury is going to take some time to come up, because for the past 3 recessions, once it goes down, it's going to stay down for a very long time, at least 2-3 quarters before it start picking up. But the spread is going to be high by the lenders, right? So I think a lot of lenders.
In other words, for beginning investors, so what you're saying is interest rates are not going down.
No, it's not going down.
Up because there's a perceived risk in the uncertainty of the economy right now.
Perceived risk, and also there's no competition, right? So Fannie and Freddie, there's no one else out there. You take my loan, otherwise, you're not going to do any deals, right? So there's no competition, so their spread has gone up pretty significantly, right? So so that has cost that could cost a lot of cap rate to expand, because now to make the same return,
okay, so now let's talk about the opportunity that comes from that. I mean, we have seen markets where the cap rates, and again, for anyone that doesn't know what the cap rate is basically based on the sale price, the return the property throws off. So therefore, the higher the sales price, the lower the return. So if a property makes, let's say, $1 million a year in net operating income, and it sells for 10 million, that's a 10 cap. If it sells for 20 million, the million only represents 5%, so it's only a 5 cap. So we have seen properties trade in the major markets like Dallas, Fort Worth, Phoenix, Arizona, LA, in the 3 and 4, or like say 4% cap rates. It's like, and brokers literally laughed in our faces when we told them we want to go buy a property in Phoenix, Arizona. They're like, yeah, whatever. So basically, so what I'm already noticing is the brokers are calling me. The brokers are going through the books because all institutional buyers are gone. And and how long do you think they will be gone? What do you see the opportunity, and how long do you think this will be gone?
I think there's no opportunity right now yet for the next 1 month. Even though brokers are calling, calling all of us. I had a few broker calling me as well, but I think the prices have not come down because the sellers are, as I say, this happened so quickly. A lot of sellers are still in their old mindset, right? If they have said, if they have thought their deal is going to be 100,000 a door, they're not going to say buy it today for 80,000 a door unless they have got really, really big problem, right? So, but there's not many sellers out there with that kind of problem, right? So a lot of sellers have not brought down their price expectation. They may go a bit less, maybe 10% less, but not a lot of less, right? And also there's no guidance on where is the cap rate right now for a certain market because no one knows, right? There's not many transaction happening, right? Even though you put a deal under contract today, you do not know the T plus 3, right? The next 3 months, because we need that T plus 3 to make sure our loan proceeds are maintained, right? And you do not know what's going to happen. You do not know how's April collection going to be. You do not know what's May collection going to be. Once we know April and May collection is, that's when if nothing really crashes, if everybody's still getting, plus minus 10%, if people know that, okay, the 10% less than what you used to be, that's where the baseline start being establishing. Right now, it's very, very difficult to put a deal under contract. Even though you and I think that it's a great deal, you might be completely wrong, right? So
Right.
no one knows, right? Because the spread is not determined, the loan proceed is not determined. So it's a lot of caveats at this point. So I think the opportunities has not started to pop up yet until we get some information about the collections for April and May, right?
Okay.
Once we get that, then would be a good time to really establish a baseline. Having said that, there could be a deal which is like going 50% off the price which was 1 month ago. That will be an awesome deal to do right now, but I don't think so. There's many sellers out there who's bringing down their price that low.
Not yet, but here, what happens if they have a property where the sellers are? What happens is then they have, particularly in the A class, as you mentioned, in the A and A minus and so on. What happens if they have several people that also got laid off because big companies don't just lay off the factory workers; they lay off the white collar workers too, and they take a longer time to buy. Movement into different states slows down just a little bit for a little bit. Like the Dallas doesn't get 100,000 people every year more, but perhaps only 20,000 more, and so on. And growth continues, but just not as much. And now all of a sudden, these properties, they go through that. They have trouble. They go to the forbearance. Month 4 comes. They can't really continue paying yet because the loss in rents has not coronavirus immediately impact, but more like unemployment or general unemployment that doesn't pop right back up because this is not just a whole bunch of waiters that go back to work when the bars open up again. And now those properties could go into distress at that point.
Could be at that point of time. Yes, absolutely. But there's also, we are talking about traditional buy and sell, right? You buy a deal, you put under contract to a broker and all that, right? But I do think there's a lot of opportunities can be capitalized much better if you go non-traditional buying and selling. For example, if you can look for seller financing deal, right? Deals where the sellers are willing to, seller finance on multifamily, which never existed before this, right? But that's an opportunity right now because you're not taking a bank loan right now. At the same time, you have the seller giving you and as a buyer, it's much more lower risk, right? Second opportunity that you can do is something called a master lease agreement, right? So you can have an agreement with the seller where you are able to tell them that, hey, we have this lease agreement. I'm going to pay you this fixed amount, but I'm going to run the operation, right? So these are the non-traditional buying and selling, which not many people does in the up market, but in a down market becomes very, very powerful.
Okay, very cool. I like that. That's where I wanted to go towards the last part of our call right now. And where are the opportunities? The opportunities are not always only in like foreclosures and bank-owned property and things like that. There's opportunities again in seller financing. If credit is tight and they don't find a buyer pool, if they give you really good terms, like if I just actually literally just saw about a deal where there was a creative financing deal where a note expert helped one of a friend of mine to get a deal done, and they structured it such that they got a 2% loan for the first 80 months. a 4% loan for the next 80 months and a 6% loan afterwards. But if the seller doesn't want to go that long, then there is a buyout clause at that point of time with some other provisions in it. And it was brilliantly done, such that the seller was very happy with it, but the buyer was very happy too, because if you can get it for the next 80 months, which is 6.5 years, 5.5 years, or whatever that is, 6.5 years, you can get a little more than 6.5 years, you can get a 2% loan. I mean, that beats about everything out there. And for that, though, the seller got a little bit of a higher price than it would otherwise get. And it just still made sense. So creative finance is going to be very interesting right now. Creative finance has a great opportunity. I
mean, let me add to that. Yeah, I mean, you're absolutely right. I mean, you guys do a lot of creative financing in land business, I presume, and in wholesaling, not in wholesaling,
we do a lot of seller financing. Yes, we do.
Yeah, seller financing and in commercial.
You're the bank. Whatever you can agree with the buyer.
Correct. So that's why I said that kind of things doesn't exist in the normal market in multifamily, right? Because normal market, all sellers know that they're going to get the deal done through brokers, right? But when downturn happens, a lot of sellers are in distress, and a lot of brokers may not be able to find buyers who are willing to work this way. And sometimes brokers want transaction-based commission, right? But so if you can work out like what you described just now, if there's a certain clause in terms of financing and a certain operation that the buyer can take over or can promise without going through this large lending program, that then you can make deals happen, right? The third thing that I want to mention, the third thing that anybody can buy a deal right now, not right now, I mean the next couple of months, which can be an awesome deal, is look for banks which is selling debt, right? There could be some bank which has over leverage, and maybe they have made a mistake of over leveraging, and they want to get rid of these loans from the books. So you can buy debt,
right?
Rather than buying the asset. But if you structure the debt so that you can foreclose and take over, and as an operator, you can get really good deals as well.
Or even if you get a big enough discounts and it's a performing asset, you just continue that way.
Yeah, absolutely. You can do that as well.
All right. So the hand coming in on the side, just so you have like some light going. Oh no, that is great.
Yeah.
Good. So I'm excited to hear that. So this is great stuff. Thank you, James, for being on the line with me. So it's not all negative, guys. So we saw like there's government interactions, although I'm critical of them because ultimately they potentially blow the balance sheet of the government further up. They create more liquidity in the market that once the money comes back, once the economy comes back, there's all this extra liquidity now in the market that could potentially lead to a weaker position years down the road, and eventually perhaps in our lifetimes to actually the destruction of the United States dollar. But that seems to be still further away. What is important is right now that the tenants can stay where they are the landlords have a way to survive. There is paths to land, like the purchasing activity has a bit stopped right now because of the lenders, but there's creative ways. If you guys like you have creative ideas, creative ways to make deals happen. If somebody's really truly ready to retire and ready to let their properties go, let their properties sell, then there's seller financing options and master lease agreements and those things. Fantastic new options, not new options, they've been around forever, but they're forgotten. They're being forgotten during the good times, and then they're coming back in during the interesting, more turbulent times.
Yeah.
So,
and one more thing I want to add is, I mean, as you said, forgotten, and also not many gurus teach that, right? Because most of the gurus started during the upturn, right? And they just know the traditional buying from broker methodology. So it creates an opportunity for people who knows that this is different options of buying and selling.
Yeah, exactly right. And good thing to mention that. So yeah, we don't teach any multifamily. We teach land flipping, because land flipping works in this market, worked in
Absolutely.
2008, 9, and 10, and 11, worked on the market down, and works on the way up. And we are having a blast right now. There's lots of deals. We are hiring a new land salesperson. We're hiring additional guys in our office, virtual assistants, things like that. So we are actually going full out, because right now is a perfect time for our business to keep buying properties, selling properties, But on the multifamily side, obviously, it's a bit different. There's opportunities coming. There's some stressful times right now, but there's opportunities coming for those who position themselves the right way. So we are positioning ourselves right now. How are you positioning yourself for that? Because we're positioning by putting cash on the sidelines. By getting lines of credit. I just talked to another guy yesterday. It's a hard money loan, but we have a portfolio of free and clear properties that we haven't tapped into. We can tap into now in a matter of like 15 days. We can get a nice chunk of money out of that. So we're positioning ourselves for the upcoming opportunities in the multifamily space to really be able to capitalize on that. But we're patiently waiting for them to come up. And I agree with you that they won't come up in the next few months yet.
Yeah, absolutely. I mean, I'm doing the same thing as well, getting line of credit, just be prepared and putting cash aside, stopping all capex, and making sure we don't have any rent increases. Just going back to notice to vacate, trying to get them to stay, and all seems to be working. I mean, people are still paying rent right now, and hopefully they do in the next 10 days. But I think
on both of our properties, we had our highest collected rents in March right now. Like on all the properties we have, like we have the lowest delinquency so far of all the times that we've kept our properties. It seems like March started really good for people, then it changed. So let's see how that goes.
I know, absolutely. And it could be just the unemployment being paid out, right? I mean, that's what the president is saying. People are guaranteed like almost 100% of their pay for the next 4 months. So why do people don't want to pay rent, right? So on top of the 1,200 that they're getting, right, from the government.
So it looks great, looks exciting. We told our investors also that we're raising the payouts right now, but we told them all that if things look really good, we're just going to pay out 6 weeks later than we usually do, or 8 weeks later than we usually do. So It's not that we don't pay out. It's just there's not enough information in the market to know whether or not it's a good idea to pay out. So we're just delaying our payouts because we got the money for from the deals. We got the money for Q1 in most of our properties, and so we're just delaying that out and seeing how it turns out. And we have gotten a lot of understanding from our group too.
Got it. That's awesome. Right. Yeah.
Wonderful. Thank you, James. That was wonderful. Great. Thanks for being having such great ideas and giving us a good update about what's going on in the multifamily market. Obviously, with 1,700 units that you own and manage, you're breathing, sleeping, and breathing and eating and inhaling and everything this business all day long. So if somebody wants to get in touch with you or wants to hear more about what you do, how can they get a hold of you?
Yeah, I mean, they can get hold of me through Facebook, LinkedIn. I have a Facebook group, Multifamily Investors Group. Okay. And also in LinkedIn, James Kandasamy, look for me. And my website is achieveinvestmentgroup.com, ACHIEVE, like achieving a goal, achieveinvestmentgroup.com. Email is james@achieveinvestmentgroup.com. I have my own podcast, Achieve Wealth Through Value at Real Estate Investing. And also I have my own book in Amazon. It's called Passive Investing in Commercial Real Estate, which is, we have sold thousands of it.
All right, wonderful. Awesome. Well, with that said, thank you very much. Thanks for coming on the show with us. And with that completes our show for today. It's a special edition, the COVID-19 Multifamily Impact Show. Give us a 5-star review, share it with others, post it in different places, watch it on YouTube, give us a thumbs up. Again, share it, and thank you very much. And thanks again, James.
Yeah. Thanks. You.
Bye-bye.
Enjoyed this episode? Then make sure you like, subscribe, and post your comments and questions below the video. We're looking forward to hearing from you.